This is the big story in my view. In fact, in my career, I think this is one of the biggest stories that's about to happen. And I've been in these markets since I got hired by Hutton as a futures broker in 75 after gold got legalized. So 50 years. This is a monster that's about to unleash. This is 50 years of silver price, okay? It's plotted on a ratio scale. So in other words, a move from 10 to 100 is the same as going from 100 to 1,000 in terms of multiple gain. And this is silver. And you can see the surge back in 1980. When you go to YouTube and see it visually, you'll see we've got an arrow that spans the last couple of quarters of that multi-year move. Remember, it started in the summer of 76 and went up to 1980. But in the last 2 quarters of that bull market, silver went from $8 to 50, compressed in the last handful of months, okay, and peaked. Okay, so we've marked the dimension of that move in the last couple quarters of that bull trend with this red arrow showing the size of it on a log scale. Then we go back to the next bull market, which was in 2010 and 11 when silver went from, it had been going up for couple of years, quite a few years since the early 2000s, just like gold. And then so it was an aged bull market. But then all of a sudden in 2010, something happened, and I'll explain what that is later. And the price of silver went vertical for the next couple of quarters from the 17, 18 bucks to 50, all compressed in the final handful of months of what had been a decade-long bull trend. Most of the move occurring in the last couple quarters. What caused that? Okay, and then I show the current bull market, which again started, back in 2015. Silver wallowed around while gold advanced and went sideways, $15 to $30 and so forth. We went up into 2021, got up to 30. Then we went into a range again for 3 or 4 years where silver just was stuck with a cap at about 30, making higher lows then in the pullback. It got down into the 20s again, I think. And then in 2024, we emerged above that 30 level and started to advance, but still not an explosion, just, a persistent process. I think we're at the cusp now of that accelerated phase, where in the final 6 months of the move, silver prices itself into a different reality. The reality of the last 50 years has been capped by $50. And those were even isolated peaks. And it's not like you lived up there for very long. It was really days or, a couple of weeks. Most of silver's action's been in the $20, $30 range for 50 years. Okay. So in real dollar terms, if you measured silver against the degradation of the money unit, it has been going down, in real dollar spendable terms per ounce. And I think we're about to launch not only through those dual highs at $50 that everybody knows. That's not technically significant to us. That's a price level that is a relic, really, because you're talking 1980 at $50. Heck, in real dollar terms, silver probably have to be over $200 right now just to match the 1980 high in spendable real terms, okay? And even the 2011 high at $50, we probably have to be well over 100. But anyway, I think we're about to launch that handful of months acceleration that drops jaws and is frankly to be expected, where silver says, I've had enough. You've made an error. I've been depressed for too long on a relative basis to gold and a relative basis to a lot of things. I'm going to catch up, and I'm going to do it so fast. If you're not there, you're going to miss it. Yeah, you'll make a high, but I suspect that high is going to be so much higher than we are now that if you're fearful of the correction that comes after that high, you're going to miss the move. If you recall, back in 2020, there was a surge in gold and silver, a dramatic surge that lasted about a handful of months. From March through, for silver, from March through late in the year, in fact, silver went from $15 to 30. Okay. During that time, silver handily beat gold's upside on a percentage basis. And the silver to gold spread, now let me explain how we measure the spread. Most people do the ratio chart, 70, 80, that kind of thing. We measure an ounce of silver divided into an ounce of price of gold, expressed as a percent. And if you go back 50 years and look at what was the highest level that spread was in the last 50 years, you'll see that in the bull trends, 79, 80, 2010, 2011, silver got up to 3.5%, and even higher in 1980, got up to 6% of the price of gold. But during 21 of the past 50 years, even in non-bull market years, silver's at least been 2% of the price of gold. But right now, silver's at 1.2% of the price of gold, and that's been a sharp advance over the last 5 months, by the way. It was under 1%. So silver's value to gold, while it's been going up with gold in price, has been degrading, especially since that 2020 surge where silver beat gold. Silver then got up to 1.5 something percent the price of gold, still fairly low, but retreated all the way back down under 1% again at that recent low in April. Since April, it's surged from 0.9 something percent to 1.2%. And when you look at the spread chart, you're already starting to break out above a downtrend on that spread, but there's a ceiling where if you go back to 2022 and 2024, that spread reached a certain level around 1.31%. They'll get worried about the details there, but
the red line.
Yeah, there's a red line on the spread, but there's a horizontal line, meaning if you go back there a third time, you're at a, quote, triple top. Don't count it stopping, okay. But we also run momentum of the spread, just like we run momentum of price. And when you run a momentum chart of that spread, you see a slightly different picture. One, you're challenging right now that ceiling on momentum. The spread, again, is at 1.2, and it needs to get to 1.31 to be there. Okay, so it's not quite there. But the momentum of the spread is as of last month, and today it may, with today's action, might even be nudging above that. Momentum of the spread is breaking out. Now, that indicates to us that silver's about to shift into a strong outperform relationship to gold. So as gold continues up, silver will go up more on a percent basis, be the better place to be, just like it was in 79 to 80 or 2010 to 11. In the tail end part of those bull markets, silver went berserk relative to gold. And at no time in history, when this spread turns favoring silver, does it mean downside in price of gold more than silver. It always means upside of price of silver more than gold. So it's always not just favoring silver, but it's also saying the price of both metals is going to go up.
You know, I've been at this game for half a century, 50 years of watching charts, cycles, panics, manias, and markets that defy logic until they suddenly overcorrect into reality. And I can tell you right now, what's about to unfold in silver is one of the biggest stories I've seen in my entire career. When I first got hired by E.F. Hutton in 1975 as a futures broker, back when gold had just been legalized again, I couldn't have imagined we'd be sitting here 5 decades later with silver still living in the same price zone it's been trapped in since the Carter administration. 50 years. That's half a century of pent-up energy, and it's finally about to blow. Silver's not just another market right now. It's a monster waiting to be unleashed. If you look at a 50-year chart on a ratio scale, and I encourage people to do this because a log scale tells you the truth about proportional moves, you'll see something almost poetic. The 1970s bull market, that incredible surge that started around 1976, ended in an explosion where silver went from $8 to $50 in the last couple of quarters of the move. That's not a typo. In about 6 months, it multiplied more than 6 times. We saw the same behavior again in 2010. Silver had been slowly building up for years, tracking gold's ascent, and then all of a sudden, boom, it goes vertical. In less than a year, it went from $17 to nearly $50. Another compressed, manic, 6-month acceleration at the tail end of a decade-long bull trend. Now here we are again. Same pattern, same compression, same psychology. And if there's one thing markets do better than anything, it's repeat the mistakes of the past under the illusion that this time it's different. Silver has been consolidating between $20 and $30 for the better part of a decade. Sure, we saw a spike in 2020 from $15 to $30 in just a few months, but since then, it's been stuck, coiling like a spring. Each dip has been higher than the last, and now we're pressing against that same $30 ceiling that's kept the lid on this metal for years. The difference this time is the setup. This isn't just a commodity cycle, it's a structural shift in the global financial system. The reality that silver's been living in, a $20 to $30 comfort zone, is about to end. And the acceleration phase when it comes won't just be a slow grind upward, It'll be a moonshot that leaves most investors staring at their screens in disbelief. People always ask, Michael, what's the trigger? What sets it off? It's not one thing. It's the convergence of decades of mispricing and the breakdown of a ratio that's been artificially suppressed for too long. Let me explain what I mean. Most people track the gold to silver ratio, 80 to 1, 70 to 1, whatever. But that's just a reciprocal of what I use. I look at it differently. I divide silver by gold and express it as a percentage. Right now, silver's about 1.2% of the price of gold. Historically, it's been at least 2% in 21 of the past 50 years. And that's not just during bull markets. In the blow-off phases of the great bull runs, 1979 to 1980 and 2010 to 2011, silver wasn't just 2%, it surged to over 3%, even touching 6% in 1980. That's what happens when the market wakes up and says, wait a minute, silver's been mispriced for decades. Today, we're sitting at 1.2%, and the technicals are lining up perfectly. The momentum of that spread, the speed at which silver is regaining value relative to gold, is breaking out of a 10-year downtrend. The last time this happened, silver doubled in months. You can mark it on the chart. When silver breaks that 1.31% level on the silver-gold spread, what I call the triple top breakout, the fireworks begin. That's when silver stops playing catch-up and starts leading. It stops being the passenger and becomes the driver. And here's what's fascinating. When this spread shifts, it's never bearish for gold. It's always bullish for both, just more bullish for silver. In every historical case, when silver outperforms gold, they both rise together. Gold leads the way, but silver sprints ahead. That's why I'm calling this the monster move, because silver doesn't just climb, it revalues.
The ongoing thing of gold and monetary metals, so I call them monetary as opposed to like platinum, palladium, which are precious, but there's a difference between precious and monetary. 3,000 years of history of gold and silver being money, okay? If you look at, like, go to a Federal Reserve St. Louis, their FRED chart, they call them, and go to an M2 chart, money supply, okay? And just look at it. Go back 50, 70 years, however far back they go, a long time. And look at, and move your little arrow along and like go to the first of the decade, January of 1970, and then go to January of 1980 and 90, and write down the number. What was the money supply then? It's parabolic, okay? Meaning the decay in the real value of the stuff in your wallet. We're a miniature, most countries in the West are, miniature versions of Venezuela. Okay, we made fun of that a couple of months ago. We put a Venezuelan stock chart on page 1 and said, boy, we should be long Venezuela, because the chart is parabolic, the stock market. You say, well, that's great. No, it's not, because the degradation of the money ongoing constitutes the explanation of why the thing's going straight off the page. So is the price of dog food or a roll of paper, is exploding as well. Well, when you go back, that many decades in the U.S., basically the money supply increases about 90%, almost doubles, in other words, every decade, sometimes more, sometimes less, and especially when the central bank gets nervous about this, that, or the other data point. Usually that's associated with the stock market downturn, when the data points really start to go sour. Then they start printing more, okay? Well, gold goes up and holds its value against that ongoing degradation. And silver does too, although it's been lagged, especially over the last couple decades, to what gold has been doing. Gold's way above its 2011 high. Heck, copper is above its 2011 high. And there's a lot of base metals out there that if you circle where you are now and go back to where, 10, 20, 30 years ago, you say, gee, silver. Silver has made a mistake. Investors in silver have made a mistake. This happens in markets. You've got enough experience. If you go back to 2007 and 8, the market collapsed for reasons that, the guys in the story, they knew why it was going to collapse. They knew a couple years ahead of time, and yet the market wouldn't do it. And then finally it did collapse and paid its dues for that which it already had done and failed to compensate for. So I think silver right now is in one of these situations where not only is monetary metal going up, gold especially, the mama market, and silver's coattailing it. Still very undervalued to gold, but it's catching up, and it's it's erasing years of underpricing relative to a lot of things, to gold, to the degradation in the money unit. For example, if you just arbitrarily go back a quarter of a century, it'd be the October of 2000, okay? And look at the S&P. Right now, it's up 3.5-fold from where it was then. It's actually less than the degradation in money almost. Gold's up 11+-fold, okay? So it's held its value against degradation of money. And that's a factor that's ongoing in all markets. And there's times when, let's say, the stock market reaches a bubble point where it's been ridiculous for too long, overpriced versus reality. And there's a lot of fundamentals out there that, that normally look at, the earnings and so forth. And those don't seem to work precisely, but they're a ballpark warning.
Let's zoom out and look at the big picture, because what's about to happen isn't just a price rally, it's a monetary event. Every few decades, silver goes through this transformation where it stops behaving like an industrial metal and starts behaving like a truth serum for the entire financial system. It's a mirror reflecting everything that's wrong with fiat currency. Right now, that mirror is about to shatter. I often tell people, the chart doesn't lie. Emotions do. The mainstream narrative does. Central banks definitely do. But the chart, that quiet, stubborn sequence of price and time, tells you the truth if you know how to listen. And what it's saying right now is unmistakable. Silver's been coiling between $20 and $30 for over a decade, making higher lows every time. Gold broke out of its old ceiling in 2024. Silver hasn't yet, but it will. And when it does, it won't just nudge higher, it'll sprint. The spread I talked about earlier, silver divided by gold expressed as a percentage, is already breaking out on a momentum basis. Even though the raw spread hasn't crossed that 1.31% triple top line yet, the momentum of that spread already has. That's the early tell. It means silver's gearing up to outperform gold in the next phase. That's what happened in late 1979. Gold was already strong, up 400% from 1976 levels, but then silver suddenly caught fire, outpacing gold 2-to-1. By the time it peaked in January 1980, silver was 6% of the gold price, an astronomical ratio. We saw the same thing in 2010 to 2011. Silver started trailing gold quietly for years, then erupted. The silver to gold spread shot from 1.5% to over 3% in less than a year. Price doubled, then tripled before gravity returned. And every time analysts said, this can't last. But it did, long enough to make fortunes for those who were positioned early and chaos for those who weren't. So here's the question. What's going to ignite it this time? It could be anything. A supply chain disruption, a major central bank announcing silver purchases for reserves, an industrial shortage in solar manufacturing, or simply a breakout above $50 that triggers a short squeeze. But the spark itself doesn't matter. The fuse is already lit. Silver's ratio to gold is historically low, its real price is historically cheap, and its fundamentals are historically tight. That's the trifecta. And when markets meet those three conditions, the outcome is always the same. A sudden, violent repricing that feels impossible right up until it happens. You want to know what it'll look like? Picture this. Silver closes one day at $49, then opens the next morning at $52. Limit up. The shorts panic. The algorithms glitch. Liquidity evaporates. Within a week, you're looking at $75 silver. Within a month, $100. And here's the thing. There won't be enough physical silver available for delivery to satisfy the demand. Already, COMEX inventories are shrinking. Registered silver stocks, the bars that are actually available for delivery, have been draining quarter after quarter. London's vaults are the same story. The LBMA used to boast about over 1 billion ounces in storage. Now less than half remains. The paper market's been pretending for years that silver's abundant. It's not. When people finally demand metal, not promises, the system won't be able to deliver. And that's when price discovery moves off the paper exchanges and into the physical markets. Shanghai, Zurich, Dubai. And when that happens, Western price control ends. That's when we'll see silver's real price. Not the price that Wall Street wants you to see, but the price that reflects actual scarcity and demand. And that price, in my view, is north of $100, possibly $200. You know, I sometimes get messages online. People send tweets saying, "Michael, aren't you exaggerating? $200 silver? That's insane." I always smile, because if you said in 1971 that gold would go from $35 to $850, people would have called you insane too. Markets always look insane when they're repricing truth. Remember, in 1980, silver hit $50. Adjust that for today's debased dollar. That's over $200 in real terms. So when I say silver's heading into triple digits, that's not speculation. That's mean reversion. And it's not just inflation adjustment. Look at the expansion of the money supply. The US M2 has grown by 150% since 2011. Has silver doubled since then? Not even close. The disconnect is staggering. Every ounce of silver is backed by a finite quantity of sweat, labor, energy, and time. Every dollar is backed by a promise. Which do you think wins when promises start breaking? I'll tell you this. The day silver breaks $50 and closes above it, it's game over for the old reality. That's the moment the new zone begins. Because once a market spends 50 years being suppressed, the new equilibrium won't just be a little higher. It'll be orders of magnitude higher. We saw this with copper, nickel, and zinc in the 2000s. They lived flat for decades, then tripled and never returned to their old zones. Silver's the last one left, and it's not going to stay behind much longer. So what do? You get in before it happens. You don't wait for CNBC to call it a bull market, because by then, it'll be halfway over. You position before the momentum breakout finishes, because once silver crosses 1.31% of gold and $50 on price, the move will be so fast it'll leave most people watching, not participating. I've seen it before. Back in the 1970s, people said, "I'll buy when it pulls back." It never pulled back. It just kept running until they were too scared to chase. In 2010, the same story. This time will be no different, except bigger, faster, and global. And here's something to think about. When silver does move to $100, it won't just change investor portfolios. It'll change psychology. It'll remind the world what real money looks like. Because at its core, silver isn't about speculation. It's about honesty. It's about a world rediscovering what value means when paper fails. When that happens, don't be surprised if you see headlines like "Silver Shock Rocks Markets" or "Central Banks Scramble for Collateral." They'll act like it came out of nowhere. But it didn't. The clues were there all along, hiding in plain sight. Silver's telling us it's ready to move. The charts are confirming it. The fundamentals are screaming it. The psychology's ripe. We're standing at the edge of one of the biggest revaluations in modern history. And for those who see it coming, who understand that we're not just trading a metal, but witnessing the repricing of trust itself, this is the moment. Not next year. Not after the correction. Now. Because the next 6 months could make the last 50 years look like a warm-up.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.